Today, I'm going to talk about U.S. stocks. Stocks. We have a first-class melt-up going on. Massive Fed created liquidity, causes stocks to melt up. Could continue until year-end as stockholders seek to defer gains until 2020, thus postponing their tax bills by 12 more months. And that is creating a stock shortage in the market, which is why we've had 6 consecutive up days. Risk is rocketing as price earnings multiples approach a 20-year high at 20 times. And I think I saw a study once on the chances of making a profitable trade. At 20 times, you have 0 chance of making money on a new long. At the 2009 low, when PE multiples got down to 9, you have 100% chance of making money on many new longs. Of course, nobody's initiating longs then. They're busy puking out stock. Biggest gains are in the stocks that were the biggest losers up into September, like banks, industrials, and commodities. Continue to focus on big tech, the market leaders. Apple 280, whoever would have believed it. Of course, I've had a 300 target on Apple for a long time. It's amazing to see it actually happen. Now a lot of people are raising targets to $400 for Apple. Our end 2020 targets could get hit in the next 2 weeks. If the S&P 500 goes up to 3,400, that is the most bullish target for next year, which suggests we're going to get a move up in the market and then a big move down sometime next year. Bottom line, marginal new high in Q1 next year, then a 20% sell-off on fears of a Democratic election win. S&P 500. Okay, Bill Davis, this is your territory. What the heck do you do up here?
Well, obviously you want to tread carefully right now. I mean, that kind of goes without saying. I've got every sentiment indicator overboard, but quite frankly, you know, as I write about, I mean, this it may not be the thing. Okay. When you're in a mania, you know, the market could continue to scream up. As you know, the market's been hitting the targets I've laid out. I said we would go back to 31.25 on the S&P, and we did. We exceeded it. Now I'm looking for the next minor level to be about 32.40. I expect that to get hit, most likely this week.
Yeah, right. Could very easily happen. You know, we're now 9.2% above the 200-day moving average. That in itself is a massive overbought condition. And look at this chart. You know, you had this one dip when Trump said the trade war would go on for another year, changed his mind the next day. Other than that, it's essentially been straight up since October 1st. Incredible market and very consistent with an end of a bull market, or at least the end of a major bull move in the market. We're along the 297.302 bull call spread, which now seems ridiculously in the money. That expires in 2 days. We'll get the maximum profit there. Dow average, same thing, but not the acceleration that you're seeing in the S&P 500. Russell 2000, the breakout is looking real there. It stalled here for a couple of weeks and now looks like it wants to forge on to new highs. We have NASDAQ. That's a new all-time high today. Really, all these charts are pretty much the same, all extremely overbought, all begging for a correction. VIX, we are down back to the 11 handle yesterday. And I would say any revisit to the 11 handle, buy like 6-month or 1 year call options on the VIX. And that's betting that sometime in the next 6 months or a year, we get a spike back up to 20. Could happen as soon as January or February. So that might be an intelligent trade to do right there. The only problem doing that now is you get the time decay over the holidays when the markets are essentially shut down. Microsoft, yeah, it's been one of our favorites. We've been long almost every month this year. 156 yesterday, just unbelievable. We're along the 135, 138, and that was aggressive when I put it on. So I think we're in the low 140s then. That expires in 2 days. again, another maximum profit point. And by the way, over the New Year holidays, I'll be analyzing all the trades we did in 2019 and figuring out where the money was made. Facebook hit 200, gave it up, keep getting regulatory or antitrust runs at this by the government. Stock doesn't seem to care, it just keeps on rising. Apple, yeah, we actually are over 280. I mean, Bill, would you be buying Apple up here, having passed on it when it was $10 in 2009? A lot of people are now buying it at 280.
Well, you know, it's funny because Apple is literally sitting at the price we were looking at as far as the upside objective. And no, to answer your question right now, I would not be a buyer of Apple.
Yeah.
You know, the time to have bought Apple was back when it was around 200.
Yeah, you know, the Barton Biggs told me a great rule of thumb when being a money manager: always leave the last 10% of a move for the next guy. It's worked like a charm ever since I learned that 40 years ago. Wow, has it been 40 years? Where did the time go? Alphabet, another undervalued stock, probably the most undervalued of the FANGs. We're long. We were long. No, are we long? I have to check. But yeah, buy every dip. You know, we jump back here on this sell-off here to 1280. We're now at 1354. That's been working great. Amazon has retail disease, and the fact that there are new Amazons making their appearance on the stage, like Wal-Mart, like Target. That's one of the reasons. There are also a lot of antitrust attacks going on. Heading over the AWS contract to Oracle was one of the great, wrongs done to this company because they dominate that market. So actually, no, they gave it to Microsoft. That's who got it. PayPal trending up, but at a modest rate. NVIDIA all-time high, and this is one we did miss because, you know, if you get to buy NVIDIA at a big discount or Microsoft at a big discount, I'll take Microsoft because it's a much more stable stock. You been doing anything in NVIDIA, Bill?
Not really, not at this point. You know, but this is certainly one. You know, I've traded Salesforce, you know, a couple of these other high-tech ones, but I've kind of avoided NVIDIA.
Yeah. You know, we got into it a long time ago. Here, I don't want to buy anything. As much as I love the company and I love the chip sector, all these things have just had incredible moves. This is almost double from the June lows. Micron Technology, same thing, new high there. Salesforce that you've been talking about, yeah, we got a great run there from 140 to 166. Boeing, here's a question that's come in. What's up with Boeing and when should I buy it? And the answer is their 737 production was shut down because they literally ran out of places to park completed planes. They have something like 400 of them now sitting around in tarmacs all around northern Washington state. Here is a very tempting place to buy. You know, and I would do something like a, 250, 270 call spread, make 10% on a month and be conservative. And I think that'll probably work. If it weren't year end, if I didn't already have my year in the bag, I'd probably be buying Boeing right here. Walt Disney, again, going to see Star Wars tomorrow night. That's the big opening. And Disney always rallies into every Star Wars opening and often sells off after that. We think they're going to win the streaming wars. So again, buy on every dip. Adobe got a breakout here. Again, we went long down at 260 with the tech letter. That's been a spectacular trade. Industrials, you can see they've been sort of sideways moving for the last month and a half, and not a lot of conviction here. Don't really want to touch any of these stocks except for Boeing, which is way oversold. I'd rather buy tech on the next dip. US Steel, same deal. Walmart, struggling to get through. My put spread, which we had on 2 months ago, seems to be having real trouble with that 120, but liquidity is finally pouring into this name. Macy's, I actually saw a buy recommendation yesterday on Macy's because it has a 9% dividend. Expect that dividend to get cut in half at least. Macy's shouldn't be paying any dividend right now. They should be pouring all their cash flow into reinvesting in their business and bringing it into the modern era. So don't buy Macy's on the dividend. Dividends can get changed. Tesla up $10 this morning, almost at the new all-time high. Look for a melt up once we break the old high of 394. All of the shorts in Tesla were getting destroyed. At one point, there was a 32% short interest in Tesla. It was down to 16% on Monday. I imagine it's probably going to zero. And by the way, a lot of those shorts were financed by the oil industry, spreading rumors about, exploding Teslas and so on. So again, 10 bagger still in this stock. Look to buy the next dip, and of course we got back into it at 180 last June. So that was another another great trade. Here's your 10-year chart on Tesla, and you can see we're right at the breakout level. And by the way, there are hundreds of stocks in the market that have similar charts, very multi-year basing, and then blast off to new highs. Southwest getting killed again on the Boeing disappointment. They're the biggest buyer of Boeings, and they are paying the price. Delta Airlines finally starting to get some action here going into the holidays. Transports sideways move there. Healthcare just up every day. It's nothing like launching a new newsletter and then 100% of what you recommend goes up. It's just a question of whether it was up 20% or up 100%. This has been a spectacular sector. And if you look at the long charts now, we are hitting multi-year resistance up here. So healthcare may be ready to take a rest, probably in the new year. Amgen, again, that was our first recommendation with the biotech letter at 195. We're now up nearly 50 points from there, or 25% in December, 3 months. CRISPR Therapeutics up 100% in 2 months. This is the DNA company, DNA editing company, which is the future of essentially all healthcare. Goldman Sachs finally got a breakout to the upside. One of the cheapest sectors in the market, don't want to touch. Palo Alto Networks, new scandal there, new insider trading scandal, but doesn't really seem to affect the share price. Consumer discretionaries, new highs. Europe off to the races on the UK election. Japan, same deal. And emerging markets, the weak dollar plays are in play. Bill, you doing anything in emerging yet?
No. No, I'm still trying to focus on U.S. equities because there's still some oversold there, but their problem right now is obviously they're becoming few and far between. The one sector that is starting to really look interesting to me is oil.
Yeah, it's certainly a dead cat bounce in play right now. Whether it's sustainable or not, I doubt it, given the massive oversupply of production worldwide. I hope all of you found this helpful, and hopefully it has also improved your trading. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.